Welcome back to the deep dive.
Good to be diving in again.
So today we've got a story of really impressive performance. Oswal Pumps Ltd.
Ah, yes, their Q1 numbers just came out. Highest ever quarterly results I saw.
Exactly. Record-breaking across the board, it seems.
Yeah.
So that's what we want to do today, really unpack those Q1 fiscal 26 financials.
See what's fueling this, right? This kind of growth.
Precisely. What's behind it, what it signals for the broader market, and, what takeaways there are for you listening.
And we're working from their official release, the investor presentation.
And the latest auditor reports as well. So we've got the details.
Should be a good one. Lots to cover.
All right, let's jump right in. So the headlines. Highest ever quarterly total income, EBITDA, and PAT for Oswal Pumps.
That's right.
These are big claims. What do these numbers actually look like, and what do they tell us?
Well, they're quite striking. Let's start with total income. It hit $5,150 million in Q1.
Okay.
Now, that's up 37% compared to the same quarter last year.
A strong year-on-year jump.
Definitely. But maybe even more impressive is the quarter-over-quarter growth. That was nearly 41%.
Wow, 40.9% QoQ. That shows real acceleration, doesn't it?
It really does. It's not just steady growth, it's picking up pace. And then you look at EBITDA.
Right, earnings before interest, taxes, depreciation, amortization, core profitability.
Exactly. That reached $1,419 million. Again, strong growth, 39.2% year over year and 42.2% quarter over quarter.
And the margin, did that hold up with the rising income?
It did. The EBITDA margin was 27.5%. That's a very healthy number, especially for manufacturing.
Yeah, that suggests good cost control and pricing power.
Absolutely. It means a good chunk of that increased revenue is flowing through to operational profit.
Okay, so top line and operational profit are soaring. What about the bottom line, the profit after tax?
Same story, maybe even more pronounced quarter over quarter. Petit had a $947 million.
Okay.
That's up 34.2% from Q1 last year, but a massive 48.2% jump from the previous quarter, Q4.
Almost 50% quarter-over-quarter jump in net profit. That's remarkable.
It is. And the PT margin stayed strong at 18.4%. Diluted EPS, earnings per share, also climbed nicely to 8.54.
So across the key metrics, income, operating profit, net profit, it's all record territory and accelerating.
Precisely. It paints a picture of a company firing on all cylinders in Q1.
Beyond those headline figures, though, what about the sort of underlying financial health? Things like return metrics, debt, especially considering they just had an IPO not long ago.
That's a really important point. Generating profit is one thing. How efficiently you do it and manage your balance sheet is another. So their return on net worth, ROA and WE, is sitting at 41.6%. And return on capital employed, ROCE, is at 50.6%.
Those are annualized figures.
Yes, both annualized. And they are very strong numbers, indicating they're generating excellent returns on the equity and capital invested in the business.
Even after the capital infusion from the IPO.
Especially impressive given the IPO proceeds coming in. Sometimes those returns dip temporarily as new capital gets deployed. But here's maybe the most interesting detail on the balance sheet side. As of June 30th, 2025, they reported negative net debt.
Negative net debt, so more cash than debt.
Exactly. Negative $89 million. They essentially have zero net financial burden right now.
Wow. For a company that just raised funds to expand, that's unusual, isn't it? In a good way.
Highly unusual and a very strong signal. It means they have immense financial flexibility. They can fund growth, weather storms, make acquisitions, all without needing more debt.
That really speaks to financial stability, a great position to be in.
No question about it.
Now, you mentioned sources earlier, including auditor reports. Was there anything specific in those we should note, especially regarding comparisons to previous periods?
Yes, a couple of important footnotes, you could say. The auditors reviewed these Q1 FY26 results, the ones we're discussing, and found no material issues. That's key.
Okay.
However, the figures for the comparative quarter, Q1 of fiscal 25, so ending June 30, 2024, those were approved by the board but not reviewed by auditors.
Ah, why was that?
The requirement for them to have quarterly audited reviews only kicked in from Q4 of fiscal 25. So the level of scrutiny was different for that earlier period.
Got it. So comparing Q1 26 to Q1 25 involves comparing reviewed figures to unreviewed figures.
Correct. And one other point, the current consolidated results include an associate company, also Solar Solution Private Limited, which they acquired only on June 20th, 2024.
Okay, so that wasn't fully in the picture for the entire prior year quarter either.
Exactly. So while the year-over-year growth is clearly strong, These factors mean the comparisons aren't perfectly apples to apples, just something to keep in mind for strict analysis.
Understood. Important context. So stepping back again, we see these fantastic results, the negative net debt. What's driving all this? What are the engines behind Oswal Pump's success right now?
It looks like a combination of factors, really. A perfect storm, maybe, in a positive sense. First, you've got really strong industry tailwinds.
Meaning the overall market is growing fast?
Very fast.
Yeah.
The Indian pumps market generally is expanding, but the solar pumps market in India, that's where it gets really interesting.
Yeah.
Estimates suggest something like a US $14.5 billion opportunity just to replace existing diesel pumps with solar ones.
It's replacing old tech.
Right. And then another, maybe US $29 billion market for farmers who don't even have pumps yet.
So a total
Wow, it's
potential of over US $40 billion in India alone for solar pumps.
Roughly US $43.6 billion. Based on those figures, it's a massive potential market.
Yeah.
And globally, the pump market is also forecasted to grow substantially. Think US $71 billion to over US $90 billion by 2029.
What's pushing that growth? Government schemes, tech?
All of the above.
Yeah.
Government initiatives, especially PMQM here in India, are huge drivers. Plus technological advances, IoT, AI and pump management, and just the global push for sustainability.
Okay, so a rising tide. How well is Oswald positioned to ride that wave, especially with those government schemes like PMQM?
Extremely well positioned. That's the second key driver. Their dominance in government schemes, particularly PMQM.
Dominance. How significant is their role?
They're cited as one of the largest suppliers of agri-solar pumps under the scheme. As of the end of Q1, they directly handled almost 49,000 turnkey solar pumping system orders.
Wow, nearly 50,000 systems.
And if you look at their market share across the entire PM Key USMIM scheme, including pumps they supplied indirectly, it's estimated at around 31%.
Almost a third of the market under that key scheme.
A very significant slice, and you see it in the numbers. PM Key UFs contributed over $1,100 million to their revenue just in Q1 FY26.
So that government focus is directly translating into huge revenue for them.
Absolutely. Then factor 3 is their vertical integration and manufacturing strength.
Meaning they make a lot of the components themselves.
Yes, they're not just assemblers. They've been doing this for over 2 decades. They have in-house manufacturing for solar modules, currently at 570 megawatts capacity.
Control over quality, cost, supply.
Exactly. It's a big competitive advantage. And they're planning to use some IPO funds to add another 1,500 megawatts of solar module capacity.
Serious expansion plans on the manufacturing side.
Very serious. This feeds into their fourth strength, a comprehensive product portfolio and clear market focus.
What does that portfolio look like?
It's diverse but focused. Solar pumps, grid-connected pumps, electric motors, the solar modules they make. But the key is where their revenue comes from. In Q1, agricultural products made up over 82% of their revenue. And within that, turnkey solar pumping systems. The full package deals were over 68% of product revenue.
So they are laser focused on that high-growth agricultural solar pump segment.
Precisely where the biggest opportunity, especially with PM Key Assume, currently lies. They do plan to introduce new industrial pumps and motors too, which suggests diversification down the road.
Makes sense. And how do they get these products to market? Distribution?
That's the final piece, number 5, an extensive distribution network. They had 11,166 distributors across India as of Q1.
Wide reach.
And they've launched something called the Oswal Shop concept, like branded retail outlets.
Oh, interesting. How's that going?
Pretty well, it seems. 320 shops established just since March 2024. It boosts their visibility and direct connection to customers.
So direct retail presence now, too.
Yeah. This whole network helps them maintain a strong presence, especially in key agricultural states like Maharashtra and Haryana, which together accounted for 80% of their Q1 revenue.
So Maharashtra 53%, Haryana 27%, really concentrated in major farm belts.
Correct. So you put it all together. Market tailwinds, government scheme leadership, making their own stuff, focused products, and a strong sales network. It's a powerful combination.
It really paints a clear picture of how they've achieved these results. It's not just one thing, but a whole system working together.
Exactly. A well-executed strategy meeting a ripe market opportunity.
So looking ahead then, what's the view from the top? What is management saying about the future, their targets, keeping this momentum going?
Well, the chairman and managing director, Mr. Vivek Gupta, sounded very confident in their commentary. He acknowledged the great IPO response, but quickly pivoted to the future.
And what are they aiming for?
They've put out some pretty ambitious growth targets. For this fiscal year, FY26, They're guiding for revenue growth between 50 and 60%.
50 to 60% growth this year. That's huge, even after the Q1 jump.
It is. And looking further out, medium term, they're targeting sustained growth of 30 to 35% annually.
So they expect this high growth phase to continue for a while.
That's the projection.
Yeah.
They clearly believe the runway, particularly in solar pumps, is long.
What underpins that confidence? Just the market potential, or do they have visibility, like orders already booked?
Both, it seems. They highlighted a strong order book. As of the end of July 2025, they had orders for nearly 30,000 pumps.
Okay, 29,961 pumps. That provides some near-term revenue visibility for sure.
Definitely. And the other piece is the strategic use of IPO proceeds. Remember that IPO was recent, June 20th, 2025. They raised about $8.9 billion in fresh funds.
Right.
And crucially, they've already deployed a significant chunk, over $3 billion of the net proceeds by the end of June.
That quickly? What do they use it for?
Primarily for key objectives laid out in the IPO plan, capital expenditure, likely for that manufacturing expansion we talked about, and also reducing some outstanding borrowings.
So putting the money to work immediately to fuel growth and strengthen the balance sheet.
Exactly, Joe. They're not just sitting on the cash, they're executing their expansion strategy. And remember, the auditor signed off on the Q1 financials with no issues noted.
Right. Adds another layer of confidence there. So if we sort of wrap this all up, take that 30,000-foot view, what does this deep dive into Oswal Pumps tell us about broader trends?
I think it's a really potent example of how operational strength can combine with, well, smart alignment with government policy. Their success isn't just because the market is hot or because they run a tight ship.
Yeah.
It's the synergy between their execution and the massive support for renewable energy and agriculture via schemes like PMPSEM.
So a case study in leveraging public policy for private growth, but also contributing to national goals like sustainable farming and energy.
You could certainly frame it that way. It shows companies that can effectively navigate and partner within these large government initiatives can unlock tremendous growth, potentially benefiting both their shareholders and the broader development goals.
Fascinating stuff. So we've really unpacked a lot here. Oswal Pumps Ltd. Hitting record highs across the board, total income, EBITDA, PAT.
Driven by those strong market tailwinds, their major role in PMKSUM.
Right, plus their vertical integration, focused product strategy, and that expanding distribution network, including the new retail shops.
And management seems very confident, targeting 50–60% growth this year, backed by a solid order book and swift deployment of IPO funds.
Okay, so here's a final thought for you, our listeners, to mull over. We've seen how deeply Oswal Pumps is tied into the PMQS-SUM scheme and their ambitious plans. How might the future path of government support for renewables and modernizing agriculture shape not just this one company, but maybe the whole picture of rural development in India? And thinking even bigger, what potential really stands out to you for solar tech to transform other sectors, maybe ones we haven't even thought much about yet? Something to ponder.